real estate investment opportunities aren't public. They are not just available to everybody and listed on some exchange somewhere. These types of opportunities are often found through networking, through building relationships. So I would suggest that you get to know, you find folks that are doing investment opportunities like this, get to know them, network, ask around, understand their value system, understand their track record, understand their business plan. It'll give you a great handle on this space before you decide to invest.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis, ready to unlock the keys to a life of true abundance. We're diving into everything from financial freedom and optimal health to meaningful relationships, geographic freedom, and everything in between. It's about creating a life rich in experiences, purpose, and joy. Get ready for empowering conversations, expert insights, and real-life stories that inspire you to live abundantly. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Secrets to Abundant Living podcast community. Hello. Welcome to another solo episode with yours truly, Amy Sylvis. I am so excited with how much this podcast has been growing, y'all. Thank you for referring friends and family and sharing episodes. Before we begin with this particular episode, we'd just like to encourage you to rate and review us wherever you're consuming this content. We'd be incredibly grateful. Spotify, YouTube, Apple Podcasts, all the great things. And for those who don't know me, my name is Amy Sylvis. I am the host of this podcast and your guide to living your most abundant life. I am also the CEO of Sylvis Capital, where we buy large commercial real estate with our investors. So our investors invest alongside of us. And wow, that could not be more relevant than it is right now, because what is today's date? Today is if my watch would tell me, the 5th of April. And the 3rd and the 4th of April have been pretty wild with the stock market. There's a lot going on, and we have received quite a bit of attention from folks wanting to take steps to diversify their investment portfolio outside of the stock market. So I figured on today's episode, we would talk about the basics of how folks can invest in real estate in this system called a real estate syndication. It is an actual asset. And we'll give you some details here, the pluses, the minuses, who's it for, who's it not for. But we're really big on personal financial education here on the podcast. And of course, the idea is money is not the destination. Money is not where we ultimately want to end up accumulating as much as possible and keeping score that way. Rather, money is simply the vehicle to live an abundant life, whether it's traveling, enjoying your hobbies, spending time with friends and family, giving back to the community, taking care of your health, all the things. Often that requires capital, that requires money, more specifically, hands-off income. That can be very helpful as well. So we like to talk in these solo episodes about that vehicle, about that financial piece of abundance. So you may or may not be familiar with this term called a real estate syndication, but essentially it is a group of investors pooling money together to buy a property. So in my case, we do this with apartment buildings and flex industrial buildings. The great part of this is the fact that if you're like me, 15, 20 years ago, that thought, oh, large commercial real estate, well, that must mean that I have to have millions and millions of dollars. The great news is by participating in a syndication, folks can invest alongside of us and not have to invest millions and millions of dollars. Typical minimums are anywhere between $50,000 to $100,000, but we'll get into that. But that's the good news. The good news is, commercial real estate has some unique benefits aside from single family homes, which is usually where people think, oh, that's probably all I can afford is maybe a single family or a duplex or a triplex. But this world of syndication really opens the doors to more folks who want to play where the institutional capital is, which is in commercial real estate. So again, a syndication has some key players They're the sponsor or the general partner. They're the people who find, manage, and do all the things with the deal. So think of, if you're flying a plane, these are the pilots. And then there are the investors, the limited partners. So the people who invest alongside of us, who contribute capital, but they earn their returns passively. So these folks are hands off. They're the passengers of the airplane, as it were. So we talk about hands off income. This truly can be hands off income. So, give you an example, we are in the process. Well, last year we bought a apartment complex in Oklahoma. It was over 100 doors, and we found it and we invited folks to invest alongside of us. And they didn't need those millions and millions of dollars, but they got to enjoy the diversification outside of the stock market, outside of the traditional vehicles that I think most people are exposed to, which are paper assets. So the other great news is in a syndication, investors, passive investors can take advantage of the experience that general partners like myself can have, the years and years of experience that individuals may not necessarily have. So benefiting from that and then sourcing deals that may not be accessible to people who are brand new to the commercial real estate investing space. Unlike single family, there isn't, all these deals aren't necessarily listed on some website. There's a lot pocket deals that are off market that only experienced people get access to. And then of course, there's that time management piece, right? Where many investors are just busy living their lives. They're busy enjoying time with their kids, working their high-powered job, giving back to the community, and they don't necessarily have the time to, tagline I love is, deal with the hassles of tenants, termites, and toilets. So what does this all look like? What does this process look like? Let's say you're saying, Amy, okay, the stock market's freaking me out. I want to jump into commercial real estate. I want to invest through a syndication. What does that look like? So myself, the general partner, and my business partners, we find a property and we create the business plan. So whether it's, what we typically do is we buy buildings that need renovation of some kind, and we're able to do that's part of the business plan and offer that to the residents who are wanting a nicer apartment unit, apartment complex. And when we buy the property, we put that in an LLC. So the property is housed in a limited liability corporation. And then investors who want to invest alongside of us, typically around $50,000 to $100,000 minimum. Trust me, we get way bigger checks, millions of dollars, but we like to keep it accessible. So 50 to 100K, invest alongside of us, and they own parts of that LLC. So that legal structure exists to protect all parties, but it's part of this syndication structure. So once the property is closed, the general partner like myself, we operate the deal, we implement the business plan, we typically hold for about 5 years. So then when we do the renovations, the property's cash flowing, we distribute cash flow to our investors. And usually we let the deal season, as we call it. So once we've done all those renovations, we continue to collect the cash flow, distribute to our investors, and then we sell, and the profits are distributed to our investors. So our typical returns include some quarterly cash flow and that appreciation upon sale, that profit from sale that folks get to enjoy. So you may be saying, all right, that's great, Amy. What are the benefits? What are the downsides? Let's talk about it. Any investment vehicle across the board is not going to be great for every single person, right? So this is the education. This is where you all get exposure and get to decide if this type of investment is a good idea for you. So let's talk about the pluses. Let's talk about the minuses. Obviously, the pluses are hands-off income. So you are the limited partners are not dealing with the everyday hassles of 3 a.m. phone calls from a leaky toilet, or having to do the renovation, or dealing with finding new residents. So that's a great thing. Access to economies of scale. So instead of a single family or several single families, you can invest, the limited partners can invest in one large property that's 10, 20, 30 million dollars. And the investors get to take advantage of that economies of scale, full-time property management on site, full-time repairs and maintenance staff, all of those great things, sophisticated institutional quality property management, that all reduces risk. Diversification. You don't have to just sink all of your investable cash into one real estate deal. You can sprinkle some amongst several different deals while still having those economies of scale. And also, of course, real estate can be a diversification play while you're still invested in the stock market, or while you still have bonds, or you still have private lending, all of those great things. There are some tax advantages. It's a bit more nuanced, but depreciation is something that some investors can take advantage of. Consult with a CPA who specializes in real estate. Please, not your average CPA, a CPA that specializes in real estate. The other benefit that I think it's really important for us to understand is real estate syndications are accessible to people through their retirement accounts. Very often, this is not discussed. So we're very used to our company's 401k plan, and we're told, oh, here are some stocks, bonds, and mutual funds that you can invest in your company's 401k. The great news is, without creating a taxable event, without incurring taxes, you can roll over your 401k, usually from a previous employer, into a self-directed IRA or solo 401k, where you can own shares of a real estate syndication. Talk about diversification, right? Talk about diversifying for your future. So we'll actually put a link to a few self-directed IRA and solo 401k companies we've heard great things about from our investors. So if that's of interest to you, you can do that and start that process. About half of our investors invest alongside of us with their retirement accounts, which is really, really great. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings, where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. I'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to sylviscapital.com/webinar. Again, that special link to reserve your seat for free is sylviscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. Okay, so you may be asking, that's great, Amy. Those are the pluses. What are the minuses? Well, a few things I tell folks to consider, because I think it's really important, is the fact that money is typically tied up 4 or 5 years in these investments. So there are no quick withdrawals like in the stock market. If you want to pull money out, this is an illiquid investment. So if you want access to this capital before 5 years, this is not the investment choice for you. There's always risk. This is an investment. So it's not like real estate is any different than any other sort of investment. So there can be downside risk. Some people don't like the loss of control. They don't like the fact that they're not involved in the day-to-day decisions. A lot of people really like it because they're off just living their lives. But there are some people that want to be the pilot of the airplane, that aren't comfortable sitting as a passenger. And again, nothing wrong with that. That's just important for everyone to understand that there is a different kind of control dynamic, as it were. But hey, when you invest in stocks, you're also not sitting in the boardroom making decisions. The CEO, the C-suite, they're making decisions with those companies too. So it's important to keep in mind. And of course, look, this investment, like any other investment, you could lose all of your money. You could lose all of it. Like other investment vehicles, get educated, ask questions, understand how risk can be mitigated. But the bottom line is, yeah, it is possible to lose all of your money with any investment, including this one. So how should you get started? Well, here's the interesting thing. Real estate investment opportunities aren't public. They are not just available to everybody and listed on some exchange somewhere. These types of opportunities are often found through networking, through building relationships. So I would suggest that you get to know, you find folks that are doing investment opportunities like this, get to know them, network, ask around, understand their value system, understand their track record, understand their business plan. It'll give you a great handle on this space before you decide to invest. Some of these investment opportunities are only open to a certain set of investors called accredited investors. So, what is an accredited investor? Well, let me start off by saying this real estate syndication space is highly regulated by the Securities and Exchange Commission, as it should, frankly. I think it should be regulated, and it is. And the SEC has two different designations. So an accredited investor is someone who has made $200,000 on their own or $300,000 with a spouse in the past 2 full calendar years. So it's 2025 as I'm recording this. So this would be in 2023 and 2024, and has a reasonable expectation of earning that here in the current year, 2025, or not and, or has $1 million in net worth outside of their personal residence. So taking a look at other assets, your retirement account, your investing account, everything else other than your primary residence, your owner occupied home, can also count towards that $1 million threshold there. So some investment opportunities in syndications are only available to accredited investors. Those can be advertised. So you may actually see some advertisements, some places online for investment opportunities for accredited folks. There are opportunities for non-accredited people, but those may not be advertised. So those truly are through networking, through asking around and building those relationships. So I don't want folks to feel like just because you're not accredited, you're not able to invest, but it is important to understand where you might find those opportunities, how you can get access to them. All right. Well, I hope that you found this helpful. I think it's a fascinating space. That's why I do this. But look, diversification means we're smoothing out the bumps in the road by investing in different asset classes. And whether you've heard this or not, paper assets are all the same asset class. They're all correlated. They're positively correlated. So if you're looking to invest in hard assets, gold and silver, commodities, and real estate can be options for you, as you may acutely be feeling the need to do that given the recent stock market performance. But hey, the choice is up to you. Make sure you define your risk tolerance. Make sure you define your time horizon. Make sure to define your goals. And that will lead you down this educational path to decide what is best for you and what's best for your family in your future. If you'd like to learn more about real estate syndications, we have a free training. You've probably heard the ad here on the podcast if you've been listening for a while, but it is sylviscapital.com/webinar. It is a free training to help you understand a bit more about this real estate syndication space. So we'll put that link in the show notes as well. And I look forward to seeing you all on the next episode. Please remember, if you found this helpful, share this with someone in your network. Help them understand what options are for investing outside of Wall Street. And we look forward to talking to you soon. One last note I want to make sure to include. This is just education. This is not a solicitation for investment. We are just talking about education here. No investment recommendations. So please do not take it as such. Consult with a financial advisor, consult with a tax professional who can work with your individual situation and help you make sure that you're reaching your goals given your individual circumstances. Have a wonderful day, y'all. We'll talk to you soon. Bye for now.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.